Welcome to this video. In this one, we're going to talk about the Canadian dollar versus the Swiss franc as requested various times by different people in my audience on TradingView and inside my academy. Don't forget to grab my free training underneath, and don't forget to like, share, comment, subscribe, because we'll be posting more and more videos every single day showing you how to diagnose markets with accuracy. So I've got the 12-month chart up on TradingView. It's telling you the data from 1982, January, all the way to the present day in 2023. So we've gone 41 years here. You can see the trajectory is very, very clear. Okay, you start all the way up here in the 80s and you come all the way down here in the 20s, okay, the 2020s. So clearly a significant decline. Most years you've fallen. You did start off on a really, really high peak, but clearly the CAD has just lost value. The Swiss franc has therefore gained, and that sentiment has persisted. Okay, so this pair has gone down and down and down and down and down. So we're going to use our monthly just to hone into the market slightly more. And you can see the picture really since 2015, the start of 2015, is a very much a sideways market that is losing a bit of value for the CAD as time goes on, just not very quickly. Now, because that sentiment has persisted for such a long time, the only thing that would really change this dramatically is an enormous change in the sentiment for the CAD. In other words, a reason for the CAD to be bought over the Swiss franc. Okay, now that hasn't happened for a significant amount of time, and therefore you can more or less summarize the trend may continue. This downwards trend and downwards movement. Now, the only thing that gives you a bit of hope to the long side is the fact that practically always after a large fall, you get a nice rebound for a significant period of time. And that varies from weeks to months to years, just depending where you look back. So because you've had such a significant fall already, at the current point where you are, you may find that your bounce comes next some point in the near future. We don't know exactly when that may be, but it is fair to say from a technical perspective, plainly, you are at a long zone. And that is just because you've got a significantly lower price than you have had before. Okay, so just understanding that is essential, because you really shouldn't be selling at these lows. It has come down for a significant period of time, and yes, it's in a downtrend, but that doesn't mean you short the lows. You really need to be looking short where you have got previous price action demonstrating that there's a short bias there. Okay, so you may find you may have to wait for this, but ultimately, at the end of the day, if you're going to be shorting the CAD Swiss, I would probably say you need a significant move up. Now, that would probably look something like this, okay? Something way up into there, coming right back to these key moving averages right here, okay? That is the kind of thing that you would probably need. And guessing when this is going to do that is a very hard game. And the fact that it's just dripped and dripped and dripped, there isn't really any buying impetus. If you look on your weekly and you look really, really near term, you can see how weak this is. Okay, it's just coming down and down and down and down and down. So I wouldn't be shocked at all if you find that your CAD Swiss goes down slightly further and beats the current low. Wouldn't shock me at all. It's very weak at the moment. And if it does drip down, I would look for some entry confirmation. I'd look for a big green candle or some kind of reason as to why it's going to bounce and then get in.